This is a DBT, direct benefit transfer. This is one of the flagship scheme of the government, where how much money gets transferred, and this is most efficient. Most of the state governments want the delivery to be done through this. Around 176 crore. Don't look at the number. They're saying that it's more than the population, because the same kind of person will get multiple benefits. So that I think benefit covered is about 176 crore. It basically the PDS benefits and the Narega, PM Kisan and fertilizer subsidy, they are delivered through the DBT. And close to 3.4 lakh crore gets, it is pilferage free, and by and large it reaches the people directly. What are the changes that happened as far as Income Tax Act is concerned? So primarily, there is a new Income Tax Act that they brought in. This is called a new Income Tax Act, which completely overhauled the whole section. They want to reduce the section. They want to make the compliance easy. They want to make the form simple, so that it becomes easy for people to pay the taxes. So that is the objective of it. So this act is going to come in effect from 1/4/2026. Some rules have been notified even yesterday. You must have seen in the papers. All the forms have been notified. They are very simple forms, very easy, online. It automatically populates. The moment you put in the form with your data, with your PAN there, it gives you 90% of the information on the form. So you don't have to do the auto population facilities are available. So then the important change in this budget is the TCS. There are two kinds of tax that we collect in advance. That is called, one is TDS, tax deduction at source. Another is called a tax collection at source. Both are collected in advance before even you earn the income. It's on expenditure that you make. Like you buy the property, there is some TDS. So you go on a foreign tour, there was a 20% TDS. You remit some money for study or medical expenses, there is some TDS. This is what we call it a TCS here. They were charging something around 20% earlier on tour packages, from 5% to 20%. Now government thought it is very expensive. That means all the foreign tours are becoming expensive by 20%. They brought it down to 2%. So why? They wanted Indian tourists to travel more, so that that is one of the areas by which they can also attract people to come into the India by that. So that is kind of, they become the ambassadors of Indian culture and tradition and all that. So again, think medical and education expense. A lot of Indians are going for medical treatment abroad as well as study abroad. So there also they reduced it from 5% to 2%. And there's one area where a lot of Indians who are working outside, in especially IT companies, they had something called ESOP, employee stock option. When they were staying outside India, they had bank account, they invested some assets, but they want to come back to India. They came back after 10 years, 15 years, 20 years. Suddenly we got an act called Foreign Assets. That is a Black Money Act. So under that act, your foreign assets have to be disclosed in your income tax return. There is some schedule called FA schedule, foreign asset schedule. Many people did not do that. Government has told them, if you are having the foreign shares, investments, if you are having a foreign assets, some building you invested, a house you invested, I'm going to charge you 300% on that with the penalty and prosecution and all that. So people who genuinely worked abroad and invested, they could not declare. They didn't do that. This act came in 2016. They gave a window of about 9 months period at that time. Not everyone could use that. So government has provided one more window now, 6 months window. For everyone who has an asset of 20 lakhs, you can still declare and pay just whatever the value of the asset that is there. 100% of it that you can pay, and maybe you can regularize. You don't have to face the prosecution and all that. So this is one, we call it as a foreign asset disclosure scheme for undisclosed foreign assets. There are two ways by which earlier we are catching the people in income tax. That is, one is called under-reporting, another is called misreporting. So we used to treat under-reporting as a less of an offense, misreporting as a big offense. What is under-reporting? I am getting income of 10,000 rupees. I show only 8,000. So 2,000 I don't show. So in such a case, the government has earlier said, okay, you have to pay 100% penalty and kind of tax maximum rate with the equal amount penalty. That means maximum rate will be 35-40%, equal amount will be penalty. For misreporting, it will be 100% plus another 200%, 300% was coming. So that means as good as you are not even reported the 10,000 rupees, then you will be end up paying some 300% on that. So government has now streamlined all this. Even the misreporting will invite only 100%. That means I failed to declare 10,000 rupees. If I report today, I'll be paying 10,000 plus another whatever the tax on 10,000 plus another 3,000 rupees is the tax plus extra 100% I pay. That means another 3,000. Only that I pay, so it becomes regularized. That means it's a big relief for a lot of people who have failed to report and they don't have to face the prosecution. This is where I told you the trust-based governance. Okay, they tell them to voluntarily do it. This is not information that government has. Somebody who has not done, you voluntarily come forward and pay the tax and then walk free. That is the attitude. So, interest by the motor accident is one of those measures where they were taxing the compensation given for the accident victims. So, that has been taken away. And the staggered timeline for filing the return, that is the procedural changes. So, the deadline, these are something which I don't want to say. This is one area I wanted to remember. See, earlier when we had a tax law or a tax holiday, government always had a tax holiday for 5 years or 10 years. They never went beyond 10 years because even 10 years is a big thing. They used to give tax holidays for 5 years. That means if somebody investing money in a special economic zone or a backward area, they make them to set up like that's how the Pondicherry something has come up, something came up in Hosur. You must have seen in a lot of areas where whomsoever sets up an industry there, they get some tax holiday. Now what they have done is because we found that global economy is creating lots and lots of issues with supply chain. Nobody is kind of tariffs are being imposed with punitive measure. Government says up to 2047 tax holiday. Imagine this is something unthinkable in a legislation like this. That means they're giving a certainty. Somebody comes and sets up a factory today in a kind of the export zone for a cloud services, global cloud, because global cloud, everybody wants to set up their own global centers in India, whether it is a global capability center for research and development or the cloud services center. So those centers, they can be a data center, they can provide to Indian customers, and they have Indian reseller entity also will be there. That means they sell it through the Indian entity to the people in India, whomsoever on the cloud, they can use that Indian reseller. There is no tax on that. Imagine this is going to have a huge amount of impact there. A lot of foreign companies will come and set it up and they are going to get the tax benefit. It will kind of provide opportunities of employment for lots of Indian. Plus it also provides the data. What is the other hidden advantage? What is that? Data resides in India. Okay, privacy. So with the Privacy Act that has come in there, government has been talking to Facebook and LinkedIn and all other companies, WhatsApp to keep the data in India. They have been fighting this before different forums. So now with this, what happens? Your data, your Indian data will reside with the India. India has a capability to host the data. So they can tell them that no, you can't say I don't have a data capability to store. You please store it in India. Okay, that's what is the idea of the government. So the next is advanced pricing. And this is one of the piece of legislation. Like I'm coming to set up a business in India. I'm coming from US. I'm investing some $10 million. I would like to know what is the tax that I pay. So when I come with I have a project report that says that, okay, your tax will be 20%, 25%. Suddenly some taxman will make an order saying that, no, I'm going to charge you some more than that, 50%, 60%, because your income has to be calculated this way and the transfer pricing and international tax adjustment they will make. Then your income will go anywhere, but you have come with a calculation that I'm going to pay this much, and if you have to pay so much, it is not viable. You have to close down. So this was happening actually. So government has told them that you need to have a advanced pricing arrangement. That means when I come with a business proposal, I go to the APA mechanism. There's an officer who handles it. I tell them, you tell me what is the tax. I don't want to be saddled with the liability later. Today, you tell me what it is. So he goes to them, he passes an order. Yes, this company, this business, for the next 5 years, I'm going to charge you only 15%. That means whatever services you have on that, 15% is the revenue. I'm doing service for 100 rupees. I'll be paying only tax on 15 rupees as my income. On 15 rupees income will be whatever 25% I'll be paying. So that certainty is something that they brought in by this. So this is something that APA we call it. They say earlier people are not kind of accepting. Tax officers will say, okay, APA will be there, I will still do whatever I want. Now government has said no. If APA has decided, it is mandatory, you cannot change it, you should follow it for about 5 years. And they have to conclude within 2 years because they were keeping it for a long time. A person cannot wait to make an investment unless you tell them quickly that what is the tax. So that also has to be concluded. Buybacks. I don't know how many of you understand what is a buyback. What is buyback? See, the companies have a lot of shares. Let us say a company has about 1 crore shares. Each share is a value of 10 rupees. 10 crores is the authorized capital or paid up capital of the company. Suddenly, company finds that the share valuation is not good. I want to reduce my capital. I want to buy back the capital from the public whom I have issued. So if I have some capital of 10 crores, I want to buy 5 crores. That means 50% of the share I want to reduce. Earlier, when company announces it, because company has a cash to pay, company has some cash which is available in the reserves, they say that I don't want to have so many shareholders, I want to reduce. That time the tax was something that which nobody was paying. This time government has said, because the fellow who bought the shares at X price is now giving it to you at 3x or 4x. He's having a capital gain. Why should you pay the tax? So now they ask the company to pay the tax. And also the promoters have to pay more taxes if he is surrendering the share to the company. This is one of the measures where government wants to raise the revenue, because there are a lot of buybacks are happening by Indian companies because they wanted to. Earlier they had a foreign player who had a stake. Now they want the foreign player to go out and they want to become fully 100% owned by India. So they wanted to make sure that these changes are happening because India is becoming by self-reliant, by itself company has a capital to invest in that. A lot of corporate balance sheets are very healthy. They have a lot of money lying in the capital. So they brought in this to see that some tax can be taken out of that. Okay, that's called a buyback tax. SCT is what I told you, that has gone up from 0.2% to 0.5%. And customs advance ruling, the same thing like advance ruling which I told you for income tax. When I import a dutiable goods, what was happening is, let us say I'm importing this, whatever the remote. So I thought that, okay, the remote is costing $1. I'm bringing it here. Duty is about 30%. So I can sell it to $1.3. So something around, if I say it's costing about 120, 130 rupees. So 130 rupees in the market, somebody will buy with my profit margin 150, 160 rupees. So this is what my calculation. Suddenly customs tell me, no, this is not 30%, it is 80%, 100%. So when they say this, I can't sell this product for 250 or 300 rupees because it's a very price sensitive product. The lot of products are there in the price range between 130 to 150. So all the consignment which came in my this thing, I have to lose because I can't even push it in the market, or I have to sell it at a discount below the cost price. So government has made sure that the same thing happens with the customs advance ruling. So that is also for 3 years to 5 years. Because for 5 years when I'm importing something, whatever the price you tell me, 30% duty, 30% duty. Don't change it in between. Don't put, you remember one case recently happened, I don't know, Chennai customs, somebody was demanding money and something happened. He has to leave the goods. He could not sell the goods and it was lying in the custom bonded warehouse. It generated a lot of interest amongst a lot of people. So that man said, I'm not going to do business in India. I'm just going out. Somebody in a whip, he said that. So consequent to the government made sure there is certainty in the customs duty when the businessman comes here. So the MAT, I don't know anybody knows about MAT? Called the minimum alternate tax. What is MAT? I have a company. Always the companies have a lot of depreciation, lot of expenditure, interest. So they incur loss. Most of the companies initially, if you look at it, they may have a revenue of 10 crore, expenditure of some 12 crores. So they will have a loss of 2 crores. These companies were not paying taxes. So government thought sometime back, maybe it's about 20 years back, to bring in something called a minimum alternate tax. Even if you incur loss, these are not actual losses because you are claiming depreciation of 30%. Depreciation is what? Basically a cash, because you can keep the money and you can invest for the future. It is not that it is going out to you, it is there with the company. So government thought, I will have a calculation by which you should pay a minimum alternate tax of 10%, 12%. That they said you pay today, whenever you make profit, you can adjust this money. That means I'm paying MAT because I don't have to pay the tax because I'm a loss-making company. Under the MAT, I'll pay about 10 to 12%. After 10 years of loss, the 11th year I make the profit, whatever MAT credit I have, I can start adjusting that tax. Like a TDS, you can adjust. This provision government has now changed it to, no longer it is a creditable. Now you pay MAT, it is final tax. That means even if you are a loss-making company, technically, you have to pay MAT of 10 to 12%, that is compulsory. And similarly, the people who had the credit earlier, you better liquidate it within a period of 5 years. I permit you to do that. So then there's the basic customs duty that has been reduced for microwave and BCD for aircraft, for defense, and the tariff rate on personal goods, which has been reduced because some people are importing personal goods. How does it impact? Anybody can tell me? I don't know how many of you are importing this games and gaming devices and from abroad through the Amazon, eBay, and if you're doing it, the goods which are available in abroad, earlier you were doing it through somebody that where the duties are very high. Now with this, you can import very freely. Whatever the goods you import anywhere from the world, as an individual through the own selling platform, you have to pay only 10% duty. That's all. That means you want a latest phone which is not launched in India, which you want to buy from somewhere else, you can buy it. What you are going to pay ultimately is the 10% duty. That is for a personal consumption, not for the business.
Thank you.